Okay, so guys, I'm close to crossing my challenge once again. This is the phase 2 of my 25k challenge. Look at the account here, is at 26061, and now we are almost crossing it. But this time around, I'm trading pound USD. But I'll tell you guys why later. But I'm almost there though, and I came very close to crossing this challenge yesterday, and I miscalculated quite actually. But it happened that my miscalculation played a huge role in why I am very close to crossing the challenge today, because I was supposed the TP I calculated for to cross the challenge was short by 0.5%. You understand? And then it happened that the market turned exactly at where my TP was. So if I tried to go that 0.5%, I would have missed my TP and probably gone back to break even and lost the whole 4 hour that I was, or 5 hour, I think. Yeah, so and today I just need 0.5 hours to cross the challenge, of which I took one small loss this morning, and now I'm just about crossing it with pound USD. So let's cross it together, guys. Yes, and we are approaching. Yes, take it. Wait, I've forgotten that I set a higher this thing. But I better go to wait for my where I can close it myself.
Just they check and once you don't they show you waiting and once you don't go by small.
But this one will take cash. I don't even need to do anything. It's in 26 to 45 now. 26 to 47. I need 26 to 50. 26 to 47. Oh god, this is so stressful. 26 to 44. Oh. Yeah, now 26 to 40, 238, 26 to 42. Oh, trading can be very stressful, guys. See me running commentary on top of this trade. My first 25k account that I will have, I will get funded. My first 25k account, 26 to 42. This is going to be a life changer, guys. Oh god, 26 to 38. We are now. Okay, 26 to 43 again. I need 26 to 50 here to cross this challenge. No, don't drop now. Let me see what 1 minute is doing. Okay, 1 minute is on a strong bullish trend. It's retracing. 26 to 16. Oh god. Guys, can you see how close this thing has come? It's trying to frustrate the hell out of me. But from 1 minute, I think it's just a pullback. The next push is supposed to take my TP. Look at it now, see how close it has come. In fact, let's follow it on 1 minute chart. This is so breathtaking. The tensions are up, guys. 26 to 11. Okay, the green candle is beginning to form. And that red 1 minute candle, guys. How do I relax with what is going on currently? This is a 25k account, bro. This is not a 5k account. All along, it's 5k account I've been doing. This is a 25k account. Okay, so the green candles are back. This is 1 minute chart. Let's see. Okay, so the green candles are stacking up, guys. 1 minute green candles, they are stacking up. Okay, guys, we have a strong green 1 minute candle, and this is 26 to 31. 26 to 29. Let's see. Follow through with this candle, please. I want this done before 3 o'clock. My timer is showing 2:57. Another green candle. What kind of short green candles are these? Can you do one reasonable green candle? Oh god, short green candle. What is this now? Do one reasonable green candle. Okay, guys, looks like we're on the move once again. Okay, yeah, we're spiking now. 240, 26 to 41, 26 to 44, 26 to 49. Oh god, do this. Can I close it myself? 26. Oh, I can't see the balance here. 26 240, 26 250. Oh god, so fast. Okay, cover it up now. 26 250, but I need to see 190. I think I need to see 190 before I close it myself. Or should I wait for it to close by itself? Okay, if I see 190 now, I close it myself. I see 190 on this yellow bar. Yeah. Close. Yeah, we've done it, bro. We have done it. 26 to 59, just on the 3 o'clock dot. Yeah. So phase 2 has been crossed successfully. This is what we're talking about, guy. In 5 trading days, I passed my 25k phase 2 account. Oh my god, I don't even know what to say again. And this is a BOGO offer account, guys. So I get another 25k account. Man, and let me show you what's happening. Like something like a pin buy is already happening. This like what's this? Pound USD. This is the reason, one of the reasons why I shifted from pound USD. But I had to take it today, guys, because I wasn't really sure of gold's direction today. Yeah, but I think I was a bit certain about pound USD. Okay, so full details later, guys.
Hi everyone, hope you're all doing great. Yeah, I have a surprise for you. The guy without an edge has crossed his 25k challenge in 5 days. Yeah, so much for someone that doesn't have an edge. Alright guys, how are you doing? How was your week? This week was, oh god, this week was kind of that bullish run from gold. Monday was the last day. I think Tuesday. I said Tuesday was the last day I did it. Yeah, but it's all good. It's all good. So you see you will even see that it was even pound USD I used to cross the challenge, because that day, the trade I took on Monday, which I will definitely show you guys later. No, on Monday, Tuesday, it was just news. It was news that took me out in profit, and it took me out to the peep. I will attach a screenshot to the peep, and that was the wrong calculation that I used for my TP. So I should have increased my take profit slightly to get that extra $125 I needed to cross the challenge to complete 26,250. But I made that mistake, and it played. This is the first time I will say a forex is playing to your luck or to your favor for me. And so on Tuesday, when I got that, I was very jubilating on Tuesday when I kicked TP before that thing started thundering down. Then when I look at my account, I noticed that I made a miscalculation, and I was not happy again. When I should have been annoyed, I was not happy again. Thank God I made this miscalculation. Yeah. So, but on Wednesday, it was a very dicey game on Wednesday, because I didn't have anything on gold, and I wanted to cross that challenge because that Wednesday was my 5th trading day. I wanted to cross. There's one spirit about this challenge. It gives you one kind of, you become agitated because look at your target, look at your target. If it was a funded account, that 1,125 is okay for me. In fact, it's plenty. So I'll just relax and withdraw it. But that extra 125, I needed to get it from somewhere. I think it was extra 100 at first on Wednesday morning. I took a trade, I lost, but I used a small amount to take the trade. So it now set me back by 180 something. I needed 180 something again that same Wednesday to cross the challenge. And so I just had to look for something on pound USD, and I crossed the challenge. Yeah, so I see a lot of you on the comment section saying that, I think not a lot, maybe 2 people saying I should show you what I do on gold. Can you imagine when one clown said that I don't have an edge? Now you want to learn from, you want to know what someone that doesn't have an edge is doing. So sometimes this market is, as in, you can't really. It's not about the strategy. Let me just be like, from what I've seen between last year and this year, it's really not about. It's about the strategy, quite alright, but there's a lot behind the strategy that you guys don't know, that you guys will not know. It's possible that your own strategy is good, but it's just the market condition is very, very important. Then your own trading psychology is the final. So it's just 3 things. So the strategy is just one aspect, Like for me now, I've always said many times, my strategy is quite simple. Although I made a tweak on pound on gold, which I would definitely, you guys have some people say I should talk about it. I have no choice. I'll talk about it today because obviously it's only gold I traded this week, except for that pound USD index across my challenge. So it's only trade gold I've been trading for some time now because of the unreliability of pound USD. Yeah, so I'll definitely talk about it later on. So it may not really be your strategy, maybe just be the market condition, the period you are in the market. It may just be that period that is making you not see that win. Because imagine pound USD now, it was what I used to cross my 5K challenge in August. Was it August or July? I think it was. I don't want to crack my brain, but I think it was July. It was pound USD. And you notice that I crossed the first one in 1 week, I crossed the second one in 1 week. So normally it's as if that period was a very good period. You cross your challenge. Then the rest of the period, like it might take a full month of doing nonsense. And that's one thing that you guys have to be able to stick to. You have to be able to hold onto your strategy during that period of doing nonsense. I'll show you an example with this gold now. Maybe for like 2 weeks, it's been trending up, but the last 3 days has been doing nonsense. And so it's difficult to make money in that period. So how can you hold that long within that period that is doing nonsense so that when it starts going well again, you start making money? That's just what this thing is about. So it's not as if you don't have an edge with your trading strategy. Your trading strategy may have an edge, or most likely has an edge, I should say. But do you yourself, your personality, does your personality have an edge over the market? So your strategy may have an edge, but does your personality, does your psychology have an edge over the market? Can you manage yourself through that rough period? So that's the big question. So before I continue, when I look at my analytics last week, I noticed that a whole 69% of you that watch my videos are not subscribed. Like that's mad. Like that's crazy. It was busting my brain when I saw it. Like 69%. So only 31. I'll hang the screenshot down there. I'm not really certain about it. I know it's 30 something, so I'll just use 39 or maybe 35. Let me say 35%. Only 35% are subscribed. Means 65% just watch and go. Other part, guys, that's not fair now. Eh? That's not fair. Just take a moment to subscribe. Okay, let me play the subscribe button around the screen so that you can just take a moment to subscribe. Yeah, so thanks for subscribing, guys. It's really, really going to be useful. I'm at 495 now. Like, can you see? This is when you have targets to meet on something, there's a way it agitates you. The same thing I talked about with trading. There's a way it agitates you. Like I have a target of 1,250 to cross phase two. Then for some reason I stopped my last trade stopped at 1,200. Now you have only that 50. That 50 can take you back to zero. If you tell me that you've not, those of you that have been trading, tell me that you've not experienced this, that 50 will take you back to zero. So it's a very, very agitating moment. So you think I'm at 495 now. So I'm looking at 500, looking at 500. That's 5. This is not range. I will not take me down to zero. But I will just be like, when will I reach this 500? When will I reach 500? So guys, please subscribe once again. And by the way, I want to thank, like, I read comments. Like, comments mean a lot to me. So that's why at first I wasn't upset about the someone saying I don't have an edge, but later on, the moment as I think about it, I get more upset the more because this is a struggle that someone is in. So I appreciate a lot of you, a lot of like there are two people, or let me say three. There are more, but the ones that are in my head because I see their comments every day. Number one is Tuku Simon. I want to really appreciate you for these are people that they know the struggles in the market. They are not being swayed by people that are just showing profit, profit, profit. He's like my accountability partner. He tells me that okay, I mean, I took this trade, it didn't go well for me in pound USD. Then we just chat about it in the comment section, the same comment section. Yes, I think I see from Elizabeth too, and there's one other lady too that I see from. I can't remember the name now. Yeah, maybe because she's not as frequent as Tuku Simon and probably Elizabeth. There's one other guy too. So I appreciate all of you very much. I accept constructive criticism that we use to gauge ourselves. Okay, maybe this will be better. I input, you input, not someone talking me down. No, I don't want that. Okay, so I believe you guys have subscribed now. Thank you very much. So I will go into my FundedNext account now and show you my account. I received my BOGO offer. I received my Bogo, another 25k account, even though it's in Jordan, but another 25k account. Okay, let me log in. So this is my FundedNext account. As you can see, I have 3 accounts here that are active. One of the inactive ones is the 25k phase 2 account, which I crossed. I crossed this in 5 days. In fact, I'm curious to see how what the equity curve looks like. You can see it says okay, that's out of the screen. Okay, so you can see my equity curve. So it was this week now, Tuesday, September 8th. I think Tuesday, Wednesday and Thursday were the days. So you can see how I crossed it. Then yeah, 5% so reached and all that. So yeah, this account is gone. Now I received this Bogo 25k account. Where is it? I think this is it, phase 1. Yeah. And so can you imagine, I'm funded on 2 accounts, the 5k and the 25k. You notice that the 25k is still at 25k gone because I decided that this is not going to be like what I did in March, in February, March, where I traded both funded accounts together and ended up losing one after the other. So I'm going to trade this 5k first until I secure a payout. Then I will now switch to 25k account. So I hope that I will secure a payout. Yeah, I've been talking so much about my birthday and all that, but whether I do a big something is up to this account, this 5k account, maybe this 25k account, because I still have this week and next week before my birthday on 26th. So even though let's assume I ended up securing a $1,000 above profit on this 25k account, even though the payout is on 3rd of October, I can go and borrow money and and scatter everywhere now. So, but I have to see that there's money on these 2 accounts first. That's what will determine how my birthday is going to become. Yeah, but I'm hoping that this week I'll be able to get this account up and this one as well. So I don't know if there is any need to go inside, but you guys know that I don't do any mago stuff. So I think I'll just move on to my TradingView account so that this video will not be too long, because I really want to I want to do some training, some teaching in that section of the video. Yeah, so these are my accounts and you can see that they are all fine. And okay, my funded account is here. I already talked about that. So there's something else I wanted to talk about. So this 5k account, when I got my payouts in February, you notice that the payouts are within the range of some 23, some 31. I got 122 at some point. I got 509 at some point. This was my biggest payout on that account. This is 10%, yeah, about 10%. So it was my biggest. You see 41 here. So imagine that this was a 25k account. All this would have been 41 times 5, because 25k account is 5 times bigger than the 5k account. So that was one of the things that you need to know about trading. That 5k account, you feel that it's small. That's how I felt all through the time I was getting a payout from it. Because at my status currently, the profit from 5k is not enough to do anything in my life except just show progress in my trading. Yes, so but for this 25k account is a bit tangible, because if you multiply 23 by 5, that's like $100 and something in payouts. Multiply this 119, I think, times 5, that's, you know what that is. You multiply 31 by 5, you know what that is too. So it becomes something solid that you can work with. Yeah, so I think that's just what I wanted to say about this 25k account. And hopefully I cross the Bogo 25k account too. Yeah, so that I can have like 52 25k accounts that I'll be trading, and even if it's $500 is giving me every 2 weeks, even if it's $1,000, it's still something. Okay, so that's it for this account. Let me go into my trading view and talk about the trading this week. So first of all, guys, everything I've said right from I started on this channel, I've always said that I trade break and retest. Yes, that's the name we call it, but you can also see it as market structure. A lot of people call it market structure. Yeah, in the SMC time, I think that's what they call it, market structure. But that's what we've always known: higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And you can see it clearly in play here. So this is also the reason why I said it may not really be your strategy that is the problem. Sometimes it's the market. Now compare this period of the market, you understand, to what we've been seeing what we saw for a while on gold. Look at, let me see if I can get a marking. So look at the whole of this period. You see, compare it to this period. You see, so it's a very clear trend. So this is where you see your higher highs, higher lows playing. Of course, it will play sometimes here, but it may not really. You just have to have that. That's where it starts. That's where it all starts from. Let me clear all these lines so I can do some marking. Okay, so let me draw something for you guys. So let's assume this is a trading pattern. So you see how the market moves. So we have this higher. You guys, if you don't know this, then you must really be a beginner in the market, because now you have this pattern. You have the higher low, higher high, higher low, higher high. So it just keeps on forming. This is a trending market. So, and what I call a break and retest when I trade is something like this. Let's assume the market is somewhere around here. Yes, so I mark this as a break. You understand? So this market is somewhere around here. So then it rallies and breaks through this resistance. Then when it starts pulling back, I want to take my trade somewhere around here. So this is my retest of this level. You understand? So I want to take my trade somewhere around somewhere around this leg downward sharp, because this is a pullback. And that's because I know that the market has a tendency of making another higher high. You understand? Or at most it will get to this level. Most of the time, except if it wants to change direction, it will make an equal high. So imagine that you get an entry somewhere around here, and then you come out at somewhere around here. That's a good profit. But how do you know where to enter is the problem. A lot of times I use Fibonacci. So I may draw a Fibonacci tool like this from this low to this high. Then I'll be waiting for a 50 to 61.8% pull back before I enter. So that's what I used to do initially, and that works. So it has a period, the period that it works, and sometimes it doesn't. So, but most of the time, this pattern I've just shown you now is a perfect pattern of how the market works, but it doesn't really work like this every time. You understand? So at times, the market, for gold especially, it will always want to take your stop loss. So if you don't learn anything from what I'm showing today, just know that before you enter your gold market, look for areas where there could be stop losses from normal retail traders, because that's how we trade, and that's what we teach a lot of people. So we always take advantage of this knowledge that we share with newcomers into the market. So always look for an area where there is likely to be a stop loss. Yes, because if you look at anyway, let me skip that first. So remember, this is not a full tutorial. This is just like tips to help you, especially if you be interested in trading gold. So reading market structure is very important. So if you look at this market structure, remember there's always a break of, there's a high, a higher high, a higher high. Same thing, a low, a higher low, a higher low, a higher low. Yeah, so this is a higher, this is a low, this is a high, this is a higher low, higher high, higher low, higher high. So if you look at this pattern here now, let me see if I can mark it. If you look at only this pattern, forget about the rest of this, only this pattern, you notice that this low did not come below this previous one. You understand? It breaks the high, it breaks this high and goes up. And when it's pulling back, it doesn't come below this previous one. Then it breaks this high and keeps going. So this is what this particular one here that I've just explained here, and also this one here too. You can see they are similar. So from here it breaks this high, it doesn't come below this one. It breaks this high, it doesn't come below this one. So this is the perfect scenario for trading. That's what they teach us. But for gold, gold would break this low. You understand? This is an example of what gold does. What you see here, gold will break below this level. May even break below this level, but most of the time, if you break below this first one, then it will still make a higher high. So that's where stop losses will be for a lot of people. And that's why I said for gold, you have to put an eye where there are likely to be stop losses. So most of the time, initially, when it breaks below here, I'll say, okay, it has changed direction, I'll start selling, then it goes up again and hits stop loss. So I will show you these two scenarios, this one and this one too, in this live chat right now. So I'll show you these two scenarios. They are very, it's always playing out with gold. Just know that if you always look for where stop losses are, before you enter, if you wake up in the morning, around maybe 7 or 8 a.m. to trade gold, look for an area where there will be a stop loss first. Don't just go and enter and buy or sell. Look for an area, just look at the chart. You will see an area where, okay, let's assume that you enter at that point. Let's assume you wake up around 7, 8 a.m. in the morning and you want to enter the market, and you enter the market. That is where you put your stop loss. I can bet you that gold will go there first before it goes in your direction. And that's because you are reasoning the way you've been taught to reason, the way to follow this trend. That's how you are reasoning, which is okay. Yeah, you understand, because it plays out sometimes, but it plays out like 1 in 5 times, or 1 in 5, 1 day in 5 within the week. And I'll show you, I'll prove that to you on this chart. So when you wake up in the morning, instead of just going to buy or sell, where you imagine your stop loss would be, go there and look for an entry. And I can bet you that most of the time, if you wake up and see a trend like this, your stop loss will most likely be around below the low, and you woke up around this level, then you enter around here and put your stop loss here. But let me just draw a bigger version. So this is a bigger version of this I'm just showing. So you see it's a perfect trend, because each of the lows are not breaking below the previous one. Yeah, so but when you wake up in the morning for gold, let's assume you wake up somewhere around here for gold. You understand? Most of the time, gold will not just reverse from here and start going, except if there is a level around this previous leg where there are likely to be stop losses as well. And I will show you all that in the chart. So except there's a level around here where there are likely to be stop losses, then it may now follow through with this perfect trend and be going up. Yeah, but most of the time, this is where most stop losses will be. This is the baba of where stop losses are. The baba of where stop losses are. So instead of this stupid gold to just be going like this and make you profit, it will come here first. Sorry about that. So it will come here and clear everybody, then it will now still make this higher high. So can you see the psychology in play? So but when it clears here, some of you, based on what we know, when a market goes below the previous low, then it has changed direction and you start selling. Yeah, that's how it's supposed to be, but gold is a bastard. It does the opposite. So you should be ready to do the opposite. So when it comes down here, if you don't see any valid place around here where there can be stop losses, then this is the next place. And that's what they call liquidity. Yeah, that's what they call liquidity. But I just use this simple term stop loss so it will be easy for you to grab. So if this is where the liquidity is, it will come down here and clear everybody, then it will still make this higher high. So when it does this, your most safest place to come out will be somewhere around this equal level. That'll be your most safest place to come out. But you can still go for the highs if you think it will break structure, like what has been happening here. So let me just show you this example on the chart right here now. So look at this trend now. You see it's making from here now to here is a higher high because it has broken above this level. Then look at what it does. It comes down, it takes stop loss. Okay, it doesn't come quite low as this because it's a very bullish market, but it comes towards here and takes these stop losses around here. Then it makes another higher high. So you see it plays out every time. Let me go into 15 minutes. This one now, it happens on all time frames. So let me go into 15 minutes as well. So for the way this market played out on Wednesday last week, because I remember these things very well, they're in my head. So this is my trade on Wednesday last week. So you see, this is the every chart between these two lines are the days movement. So this is the whole day for Wednesday, this is the whole day for Thursday, this is the whole day for Friday on 15 minutes. So let's start from here. Let me see, my marker is still on. So I'll take from here, it goes up. You see, it breaks above this level, so it makes a higher high. Then it comes down. So this is a perfect one playing out. So here it doesn't come below this level, which is fine. So that shows that it's still on a bullish trend. But if you notice this mark here, let me draw a line and arrow to it. this area here, let me put it on it. You see where that arrow is pointing? That wick there is a place where stop losses would have been for people that are trying to buy from this bullish trend. So you see what the market does? It comes, it clears the stop loss that is there. Make sure it clears it very well. Then it makes that move to the upside. So that's one example that I'm talking about. And that was the reason why I also bought this pair, because I see that this stop loss has been taken here. Yeah, then I buy. You understand? So, and for the rest of the day, it was just a very respectful day. No breaking of, no manipulations. It just keeps on making that higher high from here, higher high. See it, higher low, higher highs formation. Very clean on this one. So you see it. So very clean. Then on, sorry. So this is why I wanted to rush that beginning part, because I knew that this part of the video will be long. But I'm sure you guys, as long as you are getting value from it, you don't mind. Yeah, so then for Tuesday, of course, this is 3 a.m. where I'm sleeping, so of course I can't take a trade here. But if I was awake here, I can bet you that I'm going to buy this market. And that's because if you look down here, you notice that there are this stop loss now that I talked about. I didn't take it on Monday, but now you see what happens. What happens? It has come to take it on Tuesday. So you see, so now it comes, it clears the stop loss, it makes the bullish move. So after clearing the stop loss, this is Thursday, yeah. So I think my brother took this trade, but I was as in, I need to set an alarm, wake up at 6 a.m. in the morning, or sometimes because I work late in the night, sometimes it's impossible. But if I can wake up at 6 a.m., I can take some of these trades, because fine, we missed this one. I missed this one at 3 a.m. But if you look down here, you would see that there's a stop loss here too. There would have most likely been a stop loss at this level, because it has broken as if it was going to continue going up, but then it clears everybody and then it makes the move. So that's another example. Then here it was this is a very typical example, because then when I came in, I was looking for how to enter. I was hoping that it would come back. This is possible stop loss, see, but it didn't come to that level. Then it started making this move and it breaks higher again. So this is where me myself, I now traded like where I would always trade before. So based on what I've been saying, I shouldn't have taken this particular trade, and you can see that it took me out at loss. And that was because I was eager, like I didn't want to miss the trade. This is the best place I should have taken a trade, but I wasn't available on this. So this is the next available period. So, but I shouldn't have taken a trade. So, but then I entered somewhere around here. Then I put my stop loss below here. You see, this is your typical reasoning. What I've just done is your typical reasoning. You enter and you put your stop loss below this low. But look at what gold has done. It has come, it has cleared the stop losses here, of which of course there are many stop losses. So he has taken liquidity from this level before making that move. So so that's one thing. This is market structure I've just taught today. I don't know if there will be time to teach the entry, because the market structure is one and the entry is another. Yeah, then if you look at this one too, I got this trade on Friday, but NFP, oh my god, NFP made me not to cross this. I was supposed to cross a challenge or make profit, I think. But NFP just spoiled my day. Yeah, because this one is very clear as well. Look at this level. So when you come to the market, look for an area where stop losses are likely to be. So people that were trading this early would have entered somewhere around there and put their stop loss below this week. The market comes, it clears everybody and makes its move. So one good thing about this thing is that a lot of times this pattern, these stop loss patterns, it plays in the morning when you are asleep in Nigerian time. So most times when you wake up, if you look back just that morning, you will see that okay, they've placed one trap here for me. So it's how you now beat that trap that now matters. So now it's your job to beat the trap. So when I wake up, this is 8:45. Look at the time. Look at the time below, 8:45 a.m. And then I'm looking to enter. So this is the first trap I see, but this is the major trap. I remember the trend is bullish because you have to be in direction of the trend as well. So I don't know if you will clearly see it here, but I don't want to leave this screen. So the trend is supposed to be bullish. Oh, I didn't draw this well. So the trend is supposed to be bullish, something like this, then it comes down, then from here it goes up again. So the trend is bullish. So we're not just blindly picking these traps and entering on the back of them. We are going in direction of the trend as well. So we know that the trend is bullish and everything we are looking for is buys. You understand? So now I've seen this trap here. This is the first one. Yeah, some people may have taken, if you've taken it out of this stop loss here, this liquidity, you may have it may have taken you as liquidity as well before going. Yeah, but if you've taken based off of this one, then your stop loss will be below this liquidity zone, and that was what my stop loss was here. And so I was in this trade up till 12:30 before I left, and that was NFP doing his job. So if I had the balls to leave this trade to run, even on my personal account, I left only one position. I opened like five. I left only one. That one make this move. So if I had left everything running, I would have taken full profit on this. But you don't want to play with NFP now, guys. So yeah, I've spoken a lot about this. If you just go and do your search, you would always see, okay, this is the trade I took on Tuesday. The one that I should have used to cross my challenge, but I almost got me. It have taken me back at break even, or maybe worse of stop loss. And my funded account, the 50K account, I should have taken profit with this trade because I took this trade down. It was up about I was up about almost 150 or $200. But because of their 5 minutes, FundedNext 5 minutes rule trading stuff, if I had taken my profit, they would have cut 60% of that profit, which is not fair. Yeah, so I allow it to run longer and then see what happens. Yeah, I was almost at break even when 5 minutes reached and I closed the trade. So this is a very clear example again. The direction is upwards. We know that already. So I would mark now when I wake up in the morning. This is 4:30 a.m. This is when I'm awake 7 a.m. And then I look back. I see that, oh, okay, you guys have put one trap here. So some people, based on market structure, will feel that, okay, that's broken below here, which is what I usually do before. Then I start selling. But look at what happens. It clears everybody before it makes the move. So now I'm doing the opposite of that. So what I do is I mark this area that, okay, this is the area of liquidity. So and this is our push. This is our market structure push to the upside. Understand? So this is the area of liquidity. So sometimes it doesn't have to come to the end of this push, but sometimes this bastard of a gold can come here before it makes the move. So if I take a stop loss here, then this is the next place I'm waiting for entry. So imagine, let's assume I took a stop loss here. This is the next place I'm waiting for entry. Although it can take me out and still go in my direction. Yeah, so I may also still look for an entry here. But if this one still fails, this is the last place I'm looking for an entry for that day. Yeah, I hope that was clear. So you see stop loss is taken here, then it moves in your direction. So just bear this in mind when next you look at gold, because it happens on all markets, but it happens every day on gold. Every damn day. So always look out for it. Okay, so that's it. Then for entry, you can look for patterns of for entry as well. Break and retest is what I do. So, oh god, I'm sorry, someone is doing parties around here, so there's a lot of noise in the background. Okay, so but just bear with me. I'm almost done with this. So let me. I want to look for that trade that I just talked about. That one I took. This one I want to look for it on 1 minute, but it may be too fast. So let me go to a recent one. So I took this trade yesterday on Friday, and it was running to my take profit when everything just went south. So it's normal. And the reason I wanted to sell is because the market structure has shifted from bullish to bearish. So it was bullish here up to this point. Then when it broke below this level here, you can see the market broke below here. Then we would have expected that this may be a liquidity, and if it's a liquidity, then it should have broken back above this highest point here. If it was a liquidity, then this should just go on and break above here. But of course, it didn't do that. So it came to this level, then it broke below here a second time. See, so it broke below here now a second time. So now the market is bearish. So all I'm looking for is sales, and that's why you see me selling, selling, selling. So and this first one on Monday, I had not woken up. Is it woken up or woke up? I never wake up around 8 a.m. in the morning. But then even if I had woken up, it would have taken me back with the news that happened. I think it was CPI at break even, or maybe I would have closed at a slight profit. Then this is the second one again, and if you notice, this one too was on the back of this stop loss that had been hit somewhere around here on this trade. Then as the stop loss got hit, then I entered again and put my stop loss above this new high. And you can see what happened. It just played around and finally took me out in loss in the morning. Yeah. So then this is the remember this I told you that the market has changed from bullish to bearish here, because here it broke below here and it broke below here as well. So now this is the new high, the lower high I will call it, that should push this price downwards if it is going to continue bearish. And so you see me trying to sell. So from here, as well, I woke up late, so I should have taken a trade here. I woke up late too. This is 6:15. Okay, maybe I saw this as well though, but I just feel that 6 a.m. is too early to enter a trade for gold. Normally I should expect 7 or 8. Yeah, but it came early and I was awake quite right for this one, but I didn't take it. And if I had taken it, I would have hit TP. I taking it, I would have hit 5 to 6 hour on this trade, but I didn't take it. And I told you I wanted to sell because this market already broke structure and looking for sales. And another thing again here, don't forget the liquidity zones. This is one here, and this is one final one here. So you can see the market went for this final one before making this move. So this could have been a 5-hour trade. Then this one, this trade here, I also took this. Okay, I didn't take this one, but I took this one and it was going well before everything just went south. So let me see if I can talk about how I entered this trade. I think it's very clear. If you go to 5 minutes now, these 15 minutes I've been using to analyze. If you go to 5 minutes, you will notice a break and retest as well. So everything I do is based on break and retest. So you see this market was making this pattern, higher highs movement. You see it up here, down, higher high. Then at this point it breaks below this level. This is entry model I'm talking about now, so guys pay attention. It breaks below this level, then it makes a pullback to this level, to this neckline that has been broken. Let me just extend this. So you see, this is entry I'm talking about. This is 5 minutes. You can do this on 1 minute too, but it's clearer today on 5 minutes. So it breaks below this level. Then on retest, you can see how many weeks it's using to retest this level. And that's why I was confident that this market was going to push to the downside. You can see how many weeks it has used to retest this level before it started making the move to the downside. And normally my targets are 5-hour for my trades. If I was targeting something less, maybe I would have, of course, I expect that it would break. I wouldn't have targeted something less because I expect that it would break this low. Yeah, at least that's the minimum, or make an equal low. Remember when I talk about market structure, right? Market should make an equal low or break it. So I was expecting that to make an equal low at least, but then it didn't, and my trade reversed after 3 hours. So you see, even 3 hours, if you decide that you want to be coming out at 3 hours, it's still a good risk to reward ratio. Yeah, so I came out, it took me out at 3 hours, and that was the end of this trade and my trade for the whole week. But this one got a full 5 hour. You can see the same entry model here as well. On 5 minutes, you can see this higher highs playing, higher highs, higher lows formation playing, and then it comes here and then it breaks below this level. You can see a clear break below it. Then this is the level where I want to enter from on 5 minutes or maybe 1 minute. Then you can see how many times it pulls back here too. So if you are really interested in taking this trade, you would have taken it and made a good profit. All right, guys. So well, I feel exhausted. So this is what people that train go through, and you think they should not charge you for training. Of course, everyone that if someone has to talk this long to pass a message through, is supposed to charge you for it, definitely. Yeah, but that's by the side. This is how I trade. This is just a quick breakdown. You can see if I'm going to break down every step, detailed step, it's going to be a long, very, very long video. Yeah, but this is the summary of what I do. I hope it's able to stick in your brain. I hope it's able to at least refine how you trade. Aside from the entry, always look for liquidity traps, stop losses, where retail traders will naturally put their stop losses. That's where it should be. Wait for the market to go there first and clear it before you enter your trade. That's just the summary of everything I've just spoken about. Okay, so that was a long video. I feel exhausted already. I hope you guys are subscribed. If I look at my analytics and see 35% again watching that are subscribed and the whole 65 not subscribed, I won't be happy. So thank you for watching. Please like, share, and subscribe, and I'll see you again in my next video on Saturday next week. Bye.